I'm Charlotte McLeod with the Investing News Network, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Thank you so much for joining me online once again. It's great to see you.
Likewise, Charlotte. Thanks for having me back.
Of course. And we're speaking today on November 8th. And before we turn on the camera here, you're telling me that it was a great day in the markets. So let's start there, at least in the mining sector. Let's start there. Tell me what you saw and why that was happening. And most importantly, if you see this continuing.
Sure. So, there's been a series of events leading up to today. You've had the Fed on November 2nd, in my view, very hawkish. Created quite a bit of turmoil in the last hour and a half of trading when Powell, spoke. We saw a little bit of follow through on the third. However, then on the fourth, we had non-farm payrolls in the U.S. and that came in at 261K versus the 200K estimate. So hotter than expected. But interestingly, the unemployment rate, rose from 3.5 to 3.7. And so that was seen as a positive. I mean, I think it's too early to celebrate that, we're starting to see massive unemployment. Obviously, everyone's looking for that, me included, to kind of get an idea if we are headed into a recession next year, which I said, as early as May and June on podcasts like yours when we were together in Toronto, that, I do believe that there is going to be a recession next year, and I'm not changing my viewpoint at all. But then we got a really nice rally in the sector, mining sector on the fourth, right? Following a couple of different events, the unemployment rate, but also the fact that there was a former COVID official in China who basically said that, that China was going to open up and remove this COVID lockdown, scenario that they've been in for so many months. And China is a huge, player in the commodity space, the biggest, of course. And so that drove copper higher. Copper was up over 8% on Friday. Silver was up over 7% on Friday. Platinum has been breaking out for the last couple of weeks very quietly. So we're starting to see some real interest in the commodities sector in general, which is very exciting. We got some follow through here yesterday and today, and we're starting to see some real momentum in our space, which is fantastic. As we pointed out on your show before, Charlotte, typically sell-offs going back to the 2000, correction that started then have gone 6 to 8 months in the mining sector. So going back 22 years, this one has gone, in my view, over 24 months. So, you might get some real outsized gains as we're seeing the last few days.
Okay, and maybe you can give me a sense of the next data points that you will be looking for. I know everybody is always excited about the Fed meeting. We had that last week, but there's lots of other things that investors may want to keep an eye on.
Sure. So yeah, we're at our computer all day long, looking for this kind of stuff and looking for any type of reading the tea leaves, just like everyone else. I think the midterms in the U.S. tonight will be meaningful. If you see any surprises there, that's going to be very detrimental to the broad market, maybe our sector as well tomorrow, the 9th. On the 10th, you've got CPI, of course, and that's an 8.0 estimate right now, but 8.2 was the former last month. So, anything with an 8 in front of it, I think the market will dislike because it's hoping for a lower CPI, right? I mean, if you listen to Powell's, I would encourage every one of your listeners to listen to Powell's thing on YouTube or wherever they can find it, because it's really helpful to hear him mention CPI and inflation so many times, and saying that they're going to stick to their knitting, in my opinion, like until that is remedied, they are going to raise rates. And, we've been saying this on your show all year long. I still believe that the flip-flop, if you will, is a Q1 event. It's not a 2022 event unless we get some type of outside event that you and I can't foresee, right? China invades Taiwan, something happens in the Russia-Ukraine conflict, etc.
Okay, and if we look a little bit more closely at prices for gold and silver, when we spoke back in June at PDAC, you told us, you reminded us, a lot of people were disappointed in the performances we were seeing, but they were actually, holding up pretty well given everything that was going on in the world. So we're talking about now how they're seeing a little bit of positive momentum. What are the headwinds that they're still facing that could cause problems potentially?
Good question. So, a higher dollar is never really friendly for precious metals. We've seen, if you look at the ETF world, which is something I look at every day, that the UUP is the dollar tracker. So that has really peaked out here over the last couple of weeks and is now declining. That has helped the rally that we've seen, since November 4th, right? You have to keep an eye on the dollar at all times as a precious metal investor. As far as other things that could be headwinds, I think if we breach major support on gold, that is something people are looking at, right? Many people have been writing that a breach of 1560 is in the cards. I have not been in that camp. I've been saying that 1560-ish will hold because if we lose 1560 on a couple of closes, 1500's around the corner from there, and then I'm going to be selling a ton of stuff, right? Because I'm not going to stick around for that party. There's just too many risks if gold breaks down there. But again, look at what happened, right? It didn't do it. It didn't even crack 1600. So it's like, I think there's just a lot of unnecessary worry in our sector, and it's because of years of pain, right? It's like people have just been losing money for a long time in this sector. I pointed out on your show before that if you draw a chart on GDXJ going back 5-6 years, you've lost money. Like, I mean, if you put money in the broad market anywhere over the last 5 or 6 years, real estate, healthcare, tech, you've made a ton of money, right? So it's like that's the difference. It's changing the mentality of not only the average investor, but also the big boys that are the institutions that I used to work for to say, hey, Newmont with this, 5-6% dividend trading at 43, $44 looks really attractive considering it was at $86 in the spring, right? It's like, how much more does this thing have to fall before it gets a bid? So we're starting to see money managers starting to look at some of our sector again here in the mid and large cap space in particular.
Yeah, which is very encouraging. And kind of on that note, when we're talking about large players, we had an interesting report from the World Gold Council, their Q3 report showing us that central banks bought a record level of gold, I believe, in the third quarter. So I wanted to ask you to weigh in on that, because I know that people have been looking at that and wondering, I think, what does this high level of demand mean, especially when we have prices still at these lower levels? So what are your thoughts?
Yeah, there's been a massive disconnect between the relative performance of GLD, the biggest, ETF for gold, and let's say central bank buying, right? They've been going in opposite directions, and it's very frustrating to the average retail investor. I wrote about this in the Feneck Commodities report, my newsletter over the weekend, actually, that it's been since 1967 that we saw this kind of buying. It's 55 years ago. So when you look at central banks globally accumulating gold like this, that's very bullish. And now prices are starting to catch up on the retail side, right? You saw gold break 1700 today. You saw silver break 21 today. So, we need to see gold get back into that channel that it was in for months, 1750 to 1850. It was there for months. So I want to see it get back there before I get too excited. But the last couple of days have been very encouraging. Silver has major resistance at 22-ish and 25-ish. So if it gets through those hurdles, silver is going to be looking really good here, and it's really I've been watching that very closely. It's one of our top 10 holdings, and it's performed extremely well here over the last couple of days.
Right. So you've looked into this report. That's great to hear. I wondered what you make of, I think another element that people have been looking at is we don't actually know who has been buying some of these massive amounts of gold, this mystery buyer angle. What do you make of that?
Yeah, I don't worry too much about who it is. If it's happening, it's happening, right? Like, I mean, it would be nice to know more, but I have so many data points thrown at me every day that I can't dig into so much, stuff that I'd like to. I mean, right now, I just want to be focused on the screen. in terms of price action as a portfolio manager, because this is a time I've been waiting for about 2 years now, where it seems like we're bottoming here. And so as the old saying goes, follow the tape, right? The tape is going up, and you need to be at your desk and ready to go here.
Yeah, honestly, I kind of feel the same way. I like a good mystery, but if the buying is there, that's what seems to me to be significant. So great point. The other thing I want to ask you about, so this past week or so, we've been seeing this bidding war kind of erupt for Yamana gold. And
Sure.
I think that, of course, that has implications for the industry. I really want to get your take on what that could mean for sector, future M&A activity, and perhaps, what this could mean, because I know you focus on the smaller companies, if we may see kind of that trickle down effect at some point.
Sure. AUY is the ticker for Yamana, and it was going to be acquired by Goldfields, GFI. That deal looks like it's going to fall through now, because on Friday, two major companies, two of the largest, holdings in GDX, actually, AEM, which is Agnico Eagle, and Pan American, which is PAAS, are both going to be buying AUY in a combined deal there. It looks like, again, this is not a definitive thing, but it looks like Goldfields just within 24 hours ago backed off. They think that, they're not going to raise their bid, right? So you've got two majors taking over Yamana here. I think that M&A activity is going to continue into 2023. I think we're just getting started. I mean, there are so many good deals out there, Charlotte. And, from my experience, a lot of the majors, don't act as quickly as you'd think. So they want to see gold get to a certain level, or silver get to a certain level, to get confidence that we're not going to see, a retracement, right? We're not going to see gold at 1600 again. We're not going to see silver at 1740 again. We're going to see a move up, and then they'll start to acquire juniors and mid caps. And I think that's why we spend most of our time in the junior and mid tier space right now.
Yeah, so let's review, especially for those who may not be aware yet, where you're focusing right now, what you want to see among these juniors that would make you be interested.
Sure. So, we have a number of screens, but one of them is management. I've said that a number of times. Secondly, we screen for good jurisdictions, and good jurisdictions these days are difficult to find. I mean, there's just so many things happening globally. It's become even more important to be diligent there. We look at, if a company is transforming itself, right? It's not just about takeovers or getting a 10% investment for me. It's, has a company tried to do something different, right? And so in this market, I can think of two that come to mind that I own. Gold, Idaho Champion Gold, GLDRF, or ITKO in Canada. Basically, is we talked to them in Q1, and they were like, this gold market's tough, and I said, yeah, I mean, you've got 200% owned projects, but what I noticed on your website, you have all these cobalt claims, right? And they're in Idaho. That's a really great jurisdiction. Why aren't we talking a little bit more about that story, right? So cobalt is not very exciting to the average US retail investor, but it's very exciting to international investors, because it's an essential battery metal, right? So the company has done a fantastic job of really talking more about cobalt. They got a 9.9% investment from an Asian entity back in the spring. I think that, typically when you see those kind of deals, Charlotte, it's like maybe the company wanted to buy more, but they just do a 10% deal because prices were so depressed at the time. The company, is not going to give away more than, that amount. So I always like to see those kind of news events where, a larger entity comes in and takes 10% of the company. Another one that comes to mind that's been transforming itself is Forum Energy Metals. That's FDCFF. They have focused on copper in 2021. And this year they started to focus on their uranium assets, because uranium, as you know, got a huge bid in Q4 last year and has been trading quite well throughout this year. If you look at the recent moves in the ETFs, URA or UROY, I mean, some of these things have really moved in the last 2 or 3 days. And meanwhile, Forum Energy is at 8 cents US. I mean, it's like, this is why you have to look at small names, that haven't already made a move. Another one that comes to mind in uranium is STTDF, which is standard uranium. They just got done with a financing, very positive. So they're cashed up. They're going to be drilling, a lot in the next 9 months, and they're planning to do that throughout their locations in Canada. I think, stocks like that are trading less than 1 penny off of their 3-year low. I mean, this is just a great opportunity to get invested here.
Yeah, well, and I appreciate the look at on the uranium side. That's a sector that our audience is always a big fan of. I think it's really interesting that you mentioned this transformative aspect, because I think maybe in other markets, people might look at that and think, oh, they're changing their focus, they lack direction. What are they doing? So really interesting to hear you talk about it in a positive light. And
Mhm.
it kind of, one thing I've been asking people recently is, what would your advice be for juniors who are facing really quite tough circumstances right now? So
Mhm.
anything else you would add there?
Sure. I'm an advocate for the sector. I really am. I've never shorted anything in the sector. There's been so many opportunities to do so, as you know, over the last 2 years. And for those that don't know, shorting means betting against a stock. I've been betting against many stocks this year, but nothing in our sector. I've shorted emerging markets, made a ton. I've shorted China, made a ton. There's still a lot of low hanging fruit out there to go after. So I've been a supporter of our sector and remain so. My advice to companies right now is, I talk to some juniors right now, and when they do a financing, they're just like, hey, I'm putting 100% of this money or 90% of this money in the ground. That's great, but you also have to do things like this, right? You have to get your story out there to the media. I don't know how you do it, whether it's social media, hire someone, do more webinars, do more conferences. This is the time to get out there, right? Who cares about getting out there in August of 2020 when everyone is buying your stock anyway, right? Like, you need to be vocal. And I'd like to see more CEOs step up in this kind of market and just take a stand and say, look, we have a short seller out there. Put a PR out about it. Let's expose people like that, because these guys know that they're getting shorted. And it's like, when I see something from like an Ivanhoe or a Braveheart Resources rate recently that says, we're not aware of any material, information regarding our stock price. We don't know why it's doing what it's doing. That's taking a stand, right? It's like saying, like, everything looks good to us and we don't know why the price is the price, but it gives shareholders like me more confidence that everything's okay under the hood.
Yeah, that makes total sense. I think maybe the instinct is to, when something bad happens, you retreat and you hide for a little bit, but that makes a lot of sense. I wondered if you could share any more updates on your portfolio. So usually when we talk, we're
Sure.
focusing on what's going on with your precious metals holdings. We can talk about that, or if you want to go more broadly, talk about more things like uranium, that would work too. But what's been doing well for you lately?
Sure. So, to do something in the uranium space broadly, URA is what we mentioned on the ETF side. The juniors is really where we see a lot of value right now. Like we talked about, Forum and Standard Uranium are two that we just started positions in this year. Um, when I think about the gold space, there, I'm looking for news that would be, around, the next 1 to 6 months, right? Like, I don't, if something's going to happen in 3 years, I'm less interested, because it's just so far out. Anything can happen in 3 years, right? So, like, I'm looking for catalysts in the near term. Thunder Mountain Gold is a very, thinly traded stock, really. It's about 52 million shares outstanding. So, in full disclosure, THMG is the ticker. What's interesting is that this is another Idaho company, like Idaho Champion. I like Idaho a lot. And, this company has got, potential news coming by year end, right? So we're sitting here November 8th. That's 5, 6, 7 weeks from now, right? So it's like something's going to happen with that company potentially in the next, few weeks. Why wouldn't I put a bid on it with gold breaking 1700 like it has here? So we've been buying that. It's very difficult to buy in the open market, but we're trying to do our best to accumulate a position there, because we love the jurisdiction and the company's been in business since 1935. When I look at other catalysts out there right now, trying to go through in my mind here, some other ideas in the space that have near-term catalysts. Sure. So in the silver space, AGXPF is Silver X. They're a Peruvian producer. They have a beautiful looking chart. Stock has really broken out here, which is unusual following a financing. You know, it really bounced back very quickly, so they're cashed up. I really like that they are, you know, going for it here, right? So it's exactly what I talked about earlier. They're marketing, they're going to conferences. They say this is our opportunity, right? So many companies are doing the opposite. They're trying to just huddle up and just be like just survive, right? I mean, like this company is trying to thrive, which is making them a standout in the silver sector right now, I think. And then another one with a catalyst that's coming up is Canadian Palladium, which is DCNNF. They are, again, our first or second largest palladium stock. We have a couple that are quite large now, but I've mentioned them one other time in your program. They basically just have a PEA coming in Q1 of next year, most likely, right? So they want to prove out. What companies do is they have to do a series of different reports, right? If they're going to get acquired, you can't usually just get acquired. You've got to put out a 43-101. You've got to put out a PEA, maybe then a PFS or an FS. You've got to go through a process. And for those of you that don't know what these acronyms mean, you can contact me afterwards. I'm happy to walk you through it. But PEA stage is a stage of the company's growth that I like to invest in, because it kind of shows the market, okay, here's our internal rate of return, the IRR. Here's where the kind of landmines are, if you will, in the project, if there are any. And so you get a clearer look at what's happening with the company. But again, at 0.035 cents, I mean, it's a great proxy on palladium, because palladium seems to be starting to base here.
Okay. And I think one thing that I want to ask you now that we've gone through those and looked at the catalysts is if you could talk a little bit about your time horizon when you're investing in a company. I'm sure that it's different for each one that you look at, but in general, are there any principles you could share there?
Sure. So we don't have any type of mandate that makes us hold for X amount of time, right? The one thing I love about being independent now, after leaving Sprott and some of the bigger shops that I've worked for, is I don't have to be acting like a traditional mutual fund where I've got to be 80% invested at all times. I can't have more than 5% in one name. I want to have that flexibility, and that's one of the reasons I broke out on my own. But I think that the opportunity right now, for the junior sector, whether it's juniors, mid caps, large caps, there's just so much opportunity in front of us over the next few weeks and months. It's not ready. You're not ready to say we're going to get past all of the negativity just yet, because you have to look at the inputs. But I think the worst is really behind us as we look forward. And I've been writing about that in my newsletter, for the last, I don't know, probably like 5-6 months, that, you want to look for certain things to hold, like gold at 1560, silver at, $16. If we see these things hold, then you've got to get more confident in your buying.
Okay, well, I think we've covered a lot of topics. Before we wrap up, is there anything you would add? Maybe let us know where we can find you if we want to learn more.
Sure. Yeah, I just redid my website not too long ago. So at feneckconsulting.com. And then if you go to subscriptions, you can view our newsletter, which just came out last July. So basically, it's called the Feneck Commodities Report. We write on different commodities every issue. So, I run an energy portfolio as well as a mining portfolio. So I do talk about nat gas, clean energy, and oil, all that stuff in the newsletter, as well as the mining space. I think a lot of people appreciate that, because some people are just precious metals, and we try to offer a broader perspective, because we really do think the next couple of years in commodities are going to be very exciting.
Okay, well, perfect. Thank you so much for stopping by to share what's going on. It's always great to hear from you.
Thanks, Charlotte. I appreciate it.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is John Feneck with Feneck Consulting.